You guys hear me in YouTube land? Please let me know. Anybody out there? If you can hear me in the trade room, please let me know. Thank you guys. Appreciate it. I'll be back in a minute after this disclaimer stuff.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk may be substantial, and therefore investors should carefully consider financial stability prior to trading. Past performance is not indicative of future performance. The software, strategies, chapters, websites, and any associated websites which names for educational purposes only should not be considered express or implied or sorry to profit and loss is any limited and whatsoever. Users of the information accept full responsibility for the outcomes of deployment in most outside trader, LLC, and associated companies, agents, management, owners, and customers responsible for information. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results as certain error limitations. Some futures are hearing. No representation is being given any envelopes valuable G profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical and simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with method and hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading requires completely accounts the impact of financial risk to actual trading. For example, the ability to withstand losses or accurate with particular trading programs by trading losses material points which also reflect actual trading results. Because these trades are not actually estimated, the hypothetical results taken are compensated for the impact, if any, of certain market factors such as volatility. There are numerous other factors related to markets in general and implementation of any specific trading program which do not fully account for its simulated trading or preparation of hypothetical performance results at all. Of which generally not actual trading results.
All right, good morning. Welcome to Mayhem every day. All right, so I was long here on NASDAQ. I still had a couple different strategies on, and then Fed guides came out and started releasing testimony, whatever the hell's going on here. Again, just to add to the volatility. So we got this, and we got Hexeth talking. So, guys, it has been absolutely ridiculous, absurd lately. Like yesterday, I was on a webinar with Spot Gamma. I had a short on. It was awesome winner. Like, Trump came out and said something, and it was like, I couldn't even turn my head, and they came out and said there was a 90-day reprieve for the tariff, and the thing ripped 10%. So, you can't, I just keep saying it to my trade room, you cannot, there's nothing you can do with these headlines. It's either you decide not to trade or you accept the consequences when, these random tweets or quotes or whatever come out. It's brutal. So, it has nothing to do with edge or, my edge is my edge. It's worked for 8 years, and I still have full confidence in it. But again, when new stuff hits the wire, so it's basically like holding trades into numbers, right? Do you hold trades into the unemployment number? Do you hold trades into the Fed release, of their interest rate hikes, things like that? Nobody does that because you're just rolling the dice. Well, that's what's going on with these headlines. Like, you just have absolutely no idea what's going to happen most of the time. It's one thing if they're talking, and I've made that mistake too. If you know someone's talking, they're scheduled to talk, well then it's on you for having trades on. But most of the stuff is just random, and you have no idea it's coming out, right? So there's nothing you can do. It's like there's no way we did talk about this yesterday. So the structure stuff, we talked about how both ES and NQ had a fail balance breakout the other day, and when markets should do something that they don't do, then you expect whoppers the other way, and this is a perfect example, right? So we had one of these, and it didn't go. It actually put in a buying tail, which is not bearish, and I talked to my room about this yesterday. I said, well, heads up for this. I mean, granted, you don't know that. It doesn't matter what the reason is. This is what usually happens. I mean, this was outsized, but then you had more balance build here, and then it just rips off the page. So, thesis wise, I did expect that, but you know, I'm in the middle of a trade that was actually short, and then you get the headline, so it sucks. This trade is, I've never ever seen anything like this. Again, I've been trading for 25 years. I've never seen anything like this consistent. I mean, I've seen volatility like, you know, 2007 and then the COVID stuff, but not this sustained where, you know, we're seeing, you know, for instance, like right now, you can see your NASDAQ ATR is 88. I mean, that means it's rotating 88 points every 5 minutes. ES has been unprecedented. We have, it's 22 right now, but it's been up. We saw, I think, a 60 ATR the other day in ES. And ES is ripping, you know, 50, 60 points at a time. I mean, that's just, I've never seen anything like it. So, you know, you can complain all you want, but this is the reality right now. And it sucks, right? So it's, you got to protect your accounts is the bottom line, right? Use your stops. You know, we talk about it all the time. If you're working, all right, what did I just fill in there? Oh, I just stopped out on gold too, so just getting whipsawed everywhere as usual. So I was short some gold stuff here twice. We'll go over these trades here, but so guys, this is what you do. You just keep putting on your trade if you have the edge, and hope you don't get a headline up your you know what. And if you stop out, you stop out. And if you hit your daily loss limit, you just say I'm done. Like yesterday, I got crushed on that move up, and I'm like, okay, I'm done, right? And you got to be able to do that with your trades, or you're going to blow up your accounts. It's 100%, especially in this environment, right? All right, so onward and upwards. Let's see what's going on here. I'm still in this. I took a sexy Gexy here in NASDAQ. So a sexy Gexy is a stop iceberg event into a Gex level where it's one of the only trades where I'll jump in right in the middle of the zone, and I'm looking for the daily reaction. So I did get the daily reaction here, and I'll get out right in front of the ATR, right? So, and that was at a gamma level too. So I got out of one there, and then I held one for more of a position trade because of the because it is a stop iceberg event. So these Gex levels are incredibly powerful in their own right because you have these options dealers hedging at these areas. Then you throw in one of my 6 distinct stop iceberg events. They're not mine, I've named them, but this is the enhanced CME data, MBO data, that gives you this information, the icebergs and the stop runs. Then I hold on for a bigger position trade. So you can see I put my stop, I should have been stopped out to the tick as usual. I put it a little bit below. I'm using these Gex levels to my advantage per se, right? Because I know these markets will bounce off of these. So I'm still in this long. It's not looking real promising, but I did catch the first part of it. So, and then I also put on Izzy longs. So I have different types of trades that I'll be go over, you know, and I'm very quick on these webinars, right? Because I'm jumping from trading strategy to trading strategy. We have position trading strategies. We have auto fade strategies where I'm jumping in the middle of the zone. That's that trade I just showed you. Then we have reversion strategies. So I'm jumping from trade to trade because I'm trading live. I know it's fast. I know I talk fast, but I can't help it because I'm trading live. So I just put out, I put this in the room. I could just come out with my courses that I've been working on for about 3 years, and we've got the trading strategies and the ATR reversion courses, so you can, you know, if you're going to follow me or come in and learn what I'm doing, this is the best way where you can get up to speed and understand, because you can learn on the webinars, but again, it takes forever for a lot of people because I'm trading live and they're trying to understand what I'm doing, and it's just very quick. So if you get the courses, you can go through everything. So when you watch me live, you hit the ground running and you're ready to go, right? So I will post this document in the YouTube channel as usual. We'll go over the other stuff too. So that's everything I use in my trading. It's the courses, it's the drawing tool, which is key, especially in these types of markets where you don't have to draw these CME NBO events anymore by hand. And then everything else, my SI indicator course with the 6 distinct setups. And this is my spreadsheet if you want to do it by hand, which I did forever. So we'll go over all this stuff. All right, let's see what's going on. Just waiting for another headline here. It's been exhausting, guys. I'm not going to lie to you. Like, this is just, it's exhausting. Like, you have great positions on, and then you just get trumped or headline or whatever, or Shinebox from Mexico says something. It's just crazy. You know, it's just randomness. So you got to accept it. It's good. It'll settle down eventually, right? But you just gotta. It's either you don't trade right now, or you just. All right. So I got stopped out of the other half of that. So it's basically a break even trade, a scratch trade. I got out of one on the dealer reaction, which I was looking for, and then I stopped out of the other one that I held. All right, so another thing I saw here too, I don't know why this is not updating. This is kind of strange. I'm looking at the hero here because we did get hero alerts. Hold on, I'm having issues with this. Yeah, so you can see here, this market was like both the ES and NQ were, the hero is ripping up. So the hero is from Spot Gamma real-time options flow. So I use two different options companies or software, Spot Gamma and MentorQ. So you see all these levels, these GEX levels on here on MentorQ. We did an awesome webinar with them yesterday. I will post that in my YouTube. I haven't had a chance to post it yet. But anyway, the hero is from Spot Gamma and it's real-time options flow, which is very important, right? So you can see here, there was a hero alert. So the hero was moving higher, and it was moving notionally higher, meaning it was traded, when you get $1 billion or more notional, well, this was moving higher and the market was not. So that means the dealers are still hedging, right? The dealers are getting loaded up. They're short options. They got to turn around and buy futures to hedge themselves. So they were buying futures, but the market wasn't really doing much. That was telling you that this was coming, right? So like that whole move up, the ES basically was like spinning in place here. And then when it finally got the flow alert, then those are usually reversals, then it turned around and sold off. I didn't do anything off that, but I did notice that. I did take a Izzy long here in ES, and I got smoked on it. So again, that's, you get your events, you get your areas, and this is how I trade, right? I look for my important areas. These are inflection zones. I look for my important areas, and this is just one of my important areas, and I look for a volume event. So that was a bullish event. I took it. I don't know what's going to happen next. Nobody does, right? So that's why it's called probabilities. I took the trade like I was supposed to. That was this event. So we had stop runs in here, and I took, once it moved out of here in ATR plus, I took the Izzy long, and then the arrow flow came in, and then I got smoked. Again, that's why you trade within your limits. You should only be risking about, if you're trading your real money, 2% on every trade. If you lose 5 or 6% in a day, you got to call it quits, right? So anyway, that one was a loser. We'll maybe get into the account, your risk stuff, my risk rant later. Let's see what else is going on here. I've seriously got PTSD. You're just like waiting for a headline I don't really have anything on now. I just got stopped out of everything, but just waiting for the next headline to run you over, right? All right, so what did I miss here? I did have I put on a sexy Gexy here, but I just missed a potential trade. So we have position trades where we're looking for bigger moves. So we have, first of all, this came down into the Gex level. I put on a sexy Gexy, got beat on that one. But we also have position trades, which will look for the bigger moves, and we also have reversion trades. So we have trades because these markets, just like this, come back to the zone with ridiculous regularity, right? So we have trades for that. You can take these aggressively. So everything on these, I know this looks like a lot of my chart. It's really not, right? So these lines, so this is the event. That was a stop run. Actually, it looked like it was a double whammy here. Close. So we have thresholds, meaning tradable amounts that I will even pay attention to. So I don't trade every blip on the SI and Stop Iceberg indicator, right, with the NBO data. I look for, from watching so many of these, I know the thresholds for each market, which is a meaningful amount of volume to trade. So it's in crude, it's 150, right? So this was over almost 200 stops. So anyway, the market did come back to this zone, but now I have different trades I could put on. I missed the reversion trade. I don't even know if that was, I usually will take, what I was getting at is the chart I know is very noisy, but this was the 1 ATR, this dotted line here. This is the 2 ATR. I'm sorry, the 2 ATRs right there. You can't see it on top here. So these markets have this ridiculous propensity to hit these ATRs and come back to the zone. So you can take them aggressively, right? Meaning when the minute it touches the ATR, you take it, waiting for the retest, or you can wait for, especially on these webinars, I wait for it to tag something important, and then I take them coming back. We call that the backdoor reversion. This is all in the course that I was referring to, right? So this was not a backdoor off the GEX, but let's see what else was here. I'll tell you here. Let's take a little peek. All right, so NQ is hanging at its blue lug, so these are Ludwig levels. We'll go over those. Very important, very powerful as well that I use in my trading. Yeah, so I could have taken this. I missed this trade, right? So GEX levels are one of the areas where I'll take bounces off of, and I'll take the corresponding reversion back to the zone. This was a perfect Ludwig level reversion, right? Like it doesn't get any better than that. Bounces off the blue lug, and if I was watching, this is right when I got on the webinar, so I missed this. So of course I take the loser and I miss the winner. That's how it's been lately. Bounces right off that blue lug. You take the two, there's the 2 ATR right there, and the 1, you're out of the zone. So that was, hopefully my room caught that. If you don't catch that, then I at least have some excuse because I was getting on the webinar, but that was, they don't get any better than that, right? Ludwig level, bounces right back to the zone. Another missed winner, but that's just the way it goes. All right, so anyway, I missed the reversion, so now what do we have? Potential position trades. So bark and lick is when the market tags an ATR or more, comes back to the event, and then moves back out. So the only qualifier or filter I have for that trade is algo guy, which is an exponential moving average. That's this guy. We call it algo guy because so many algos trade off of this. If this is in the direction of that bark blind ATR retest that I just showed you, then I will take the trade. Well, right now this thing just pulled back above. The issue here is I don't know if this tick, because the volatility has been so heightened. Yeah, see the ATR is 30 right now, so I should move this to again, I almost never move these, but with this volatility lately, you have to, because or else it's not even worthy looking at because it just crosses back and forth because the tick size is too low. All right, so let's just change this to a 10 tick and see what this looks like here. See if my bark and licks are still on the table to go short and crude. Yeah, so see how this looks different now. And I think this is the correct sizing right now just because the ATR is 30. Crude's usually between a 15 and 20 ATR. So I like that. So now we have different trades here. What do we have? I can take a red rum. Red rum is so everything I'm referring to, trading strategies are just areas I look for the SI event, stop ice events. So that stop run, when it came down there, I didn't take it then, but this is a variation of the red rum where it comes back to the event, which is in the red ribbon. I could take that trade. I could take barks and licks because algo guy is bearish, right? So if this comes back out of here, this is the pattern I need to see for these particular strategies. ATR retest confirm. I'm taking those shorts. So like the problem is here, I don't like taking shorts into the lugs, as you can see. This thing just bounced off of here, so I'm going to turn around and take bark lick right into an area where I already know these Ludwig levels, especially the major ones. She calls them big blue and big red, which are the most powerful ones. So I'm going to pass on that trade for now. I want to see new Ludwig levels. The only time I will trade into the Ludwig levels usually is if I see heightened relative volume, right? Meaning the big money's in here playing. And actually this isn't bad, so we'll see what it comes back here. Yeah, I mean, big money is playing. So I'm willing to take that. If that comes back, I'm going to take it. Again, if the relative volume, if I didn't see, and this represents many times the big players are in here when you see this thing spiking over 200%, right? So if this comes back again, I'm going to give this a shot in the lug. It is still, I mean, it's already, probability trade as it is. You win some, you lose some, but this is asking for trouble. But that's all I've been doing lately, so we'll go ahead and put this on. Comes back, I'm going to short, bark, lick, and see if there's liquidity down here. So the lick trade, liquidity trade, is the same thing as a bark where you're waiting for ATR retest confirmed, but my main target is the heavy resting liquidity. So you had obviously heavy resting liquidity just means big orders in the order book. So it's just this represented by that, right? And you look at this and you say, oh, it's only 39. That's not a lot. Well, relatively it is, right? You look at the rest of these contract sizes in here. That's why the heat map in Bookmap is so awesome. You can really see these areas, and they're like magnets, right? Because it's where the big money want to get their fills. So I see I see one here, and I see a little bit here. So if I did get filled on that, those would be my ultimate targets for the lick trade. And then we'll go over the other areas if it starts heading down there. So I'm going to put on shorts here, 59.09, and so this is the zone drawing tool. It tells me my sizing. So I'm risking $500 on these trades, right, per trade. So based on my risk level, and this is all part of the zone drawing tool. You can get that on the Bookmap marketplace. You see right here, I put in what my account size is and what I'm risking. Again, on these Apex accounts that I have tied to each one of these strategies, I'm risking 10%. Do not risk 10% of if you're living off of your trading money. Do not be risking 10%, even if you're not living off of it. If it's real money, I mean, Apex is real money. I have 4 live accounts, but right now, but the point is, you don't want to be risking 10%. You will blow out your account one day if you're risking 10% a trade. I promise you, there's no doubt about it. So anyway, if this comes back, I'm risking 5% or $500. That means I could put on 0.5 of a full contract. Obviously, you can't go 0.5, but I can trade 5 micros. It's the same thing. Even if it said 10, I would not put on one full one because I like to put on. I want to get out of some as the market moves in my favor, right? It's called paying myself as the market makes money available to me, straight out of Trading in the Zone by Mark Douglas. So I will put on 5 micros, and that will allow me to piece out of some if it moves in my favor. 5909, I'm putting on 5 Bark, Lick, and Red Rum. If you guys got questions, throw them into YouTube because I don't usually see. If you tag me on the Discord channel, then I might see it, but you're better off putting it in YouTube. So this is, you know, the zone drawer and my entries and my exits are all based on the current volatility, which is represented by the ATR, average true range, and then the size of the zone. So this is telling me where, in the way I enter these position trades, I wait for the market to move an ATR plus out to get in, and if I'm wrong, I put my stop way there and up there, and it helps me avoid the best I can algos. Because if this is able to get, say I get filled on these, if this is able to push all the way back here through the volume event and another ATR plus out, then I say you win, uncle, on the next trade. But what I don't do is put on a trade and then put my stop right there like most traders do, and that's why most traders don't make it in the business, because then they're just getting stopped out on the constant algo whipsaw. As you can see, like this algo is screwing with everybody. So that's the best way that I determine from trading millions of these things over the last 8 years to get in and get out for position trades, right? This is down too long, missing events here. So that entry is at 5909. I could put on 5. I keep saying that. So that's.
Order canceled.
That was the wrong account. 5909. Lick. Red rum. All right, those are working. Short crude. As far as thesis and structure, so I use the structure, meaning the bar chart balance areas. So markets are in 2 states, always. They're either balancing or they're trending. Balancing or they're trending. So I come up with thesis based on how the markets react to their balance areas. Balance areas are simply 2-sided trading where traders are placing bet, and when one of the sides is wrong, you get moves like that, right? So, and what I do is, as well as I base my thesis. I come up with a thesis. If it's in the direction of the volume events that I'm trading, the real time stuff, which is the most important stuff, then I trade bigger size. So a thesis again is just a guess of what I think is going to happen. Right, so if I'm sitting here yesterday, this is one of our trades here. It's called Breaking Bad. The current balance breakout through the high volume node, which is just the middle of a balance area where the most trade occurred. I could have caught that trade yesterday, but I said uncle and got out. I mean, this was so fast. It literally moved 10%. All these markets moved 10% in minutes, right? So anyway, like yesterday, if I was actually trading this, I would have taken a long here and traded double. So if there was a long event, I would have taken double size because of my guess based on structures. So right here, I have no opinion as far as trading bigger size. Plus, especially in these market environments, you probably don't want to be trading double size anyway because you're just asking to get crushed on the headline. So I'm trading normal size short. I got shorts working there. Let's go see what's going on here. So you can see this hero keeps moving higher, right? So this is the options flow. Just moved another billion. So let's see what the market's doing here. Just to come up with a thesis. We have hero trades. It's called the Floby. So I love saying that word. Yes, they are a cutting machine. So I name my trading strategies. They're funny, memorable. That's the whole point, right? So the Floby is if I get a hero alert and I get an event that's a counter event, then I will take this trade. We'll go over if it happens. I'm not going to really get into it right now, but these are one of the 3 auto fade strategies where I'll jump in right in the middle of the zone. As you can see, guys, this is very choppy, right? And this is the best way too. So if you're seeing, if you're using the Stop Iceberg stuff, which you should be, or you don't have all the information, if markets are tagging the ATR above and the ATR below, that I won't put trades on, right? Because it's validated both ways. There's nothing for me to do, and it's just telling me it's a complete chop fest, and that's exactly what's going on here. So instead of me trying to keep jumping in like most traders do, trying to catch the next big move, I'm like, I'm not doing anything here until I get a new event, right? So that keeps you out of trouble. So there's nothing for me to do on this, but you could see it both times. It retested, came back to the zone. So that's just, these markets just gravitate towards these high concentrated volume areas, which are just where traders are loaded up. That's the whole principle behind what I do. Volume runs the show. I don't care what, hold on. I don't care what lines you have on the chart. They don't mean much if you're not getting volume in that area. That's people trading in those areas or big money. Same here with NASDAQ, and that was real nice. This is my MO lately, or for the last 25 years. Once again, stopped out to the exact tick. Remember I had that last Sexy Gexion or that other one? It's just, it's exhausting, guys, lately. I'm telling you, it's just between the tick outs and the headlines, it's just exhausting. But you either just take a break, I don't know, a 4-year break during the presidency, or you got to accept it, right? All right, what else do we got going here? Ronnie Rojas, could you explain where to put the stop loss? So that's all built into the zone drawing tool, right? So my entry is the same as my stop the other side, right? So if I'm getting in, let's just use position trading, right? So again, that's this part of the top part of this document. And I just literally did a course on all these different position trades, right? I'll show you this real quick. We got natural gas numbers coming out here too. Of course. Hold on a second, guys. 3, 2. Something going on anyway, so. All right, so anyway, you know, these were, I just did a live event to get through all these things. I mean, this is 7 hours of content. So here's the trading strategies course, right? So I go over each one of these. What is it? Right, so we got position trading strategies. That's all these, right? So I go over each one of those, and then we have, it's the same thing you see on the sheet. Hold on one second, guys. Can't clear my throat. The auto entries and positioning. So let's go back to the original question, right? So for the position trading strategies, which are all these, I demand certain things happen, right? So I demand it push the ATR. So I either wait for ATR retest confirm, or I get in aggressively, meaning first move out of the zone. But either way, I wait for it to push an ATR plus 15% out of the zone. Well, how do I come up with that number? Because I've traded 4.2 million of these things, right? That's the best way that I've determined to stay out of it. Like, look at that Christmas tree. When you see the Christmas tree, it's algos whipsawing everybody. So the best way to determine how to trade these, or the best entry points, is to wait for it to push an ATR out. I understand it erodes the risk reward. I don't care. I'd rather have less risk reward R factor than get chopped up in every trade, because I'm jumping in and smack dab in the middle of the zone. That's why I do that, right? So if I get in a trade, this yellow line is my entry, right? It's called the aggressive entry. You can see it over here. Long aggressive, right there. Or short aggressive, I'm sorry. So that would be that price. If I'm going to go short, these numbers are the same numbers on the chart. You can hover over this too. So if I hover over this thing, look in the bottom left there, 31.94. 31.94 right there, right? So to your stop question, if I get in here, this is my stop, the yellow line on the other side, which is a long aggressive. So if I'm taking longs, this is where I'm getting in, and my stop's the short aggressive. If I'm getting short, I get in here, and my stop is the long aggressive. So it's just basically the yellow line in the zone drawing tool, right? So I have a spreadsheet too, because we did this by hand for years, and you can get access to the spreadsheet if you, of course, I'm signed out of it. All right, I don't have time to do that, but what I did for years was take these zone prices, the top and the bottom of the zone, the SI event, and plug them in a spreadsheet. Well, this zone drawer is the spreadsheet now, and so everything's on here for me instead of going and plugging this in a spreadsheet, seeing what my position sizing is, seeing where I get in, seeing where I get out. All that is in here, right? So you can see in the settings here. So these are the colors of my events, right? Buy ice is blue, sell ice is black, buy stops are yellow, sell stops are red. You can change these, right? But that's what I use. And these are the different levels, right? So the validation meaning of the ATR right now in gold, it's 67. It's rotating 67 ticks every 5 minutes, right? Or $6, $6.7. So anyway, this is telling me the validation is just where I validate the event, right? So for me to say this is a bullish event, again, this is just from watching so many of these, it's got to tag the blue validation, which is just literally the ATR, right? That's what that is. For me to enter the trade, that's the aggressive entry. If I weren't going to go long here, that's that. But that's where the stop is on the other side of the event. So it's either one. If I go short, like I just said, then my stop's up here at this one. If I go long, then my stop's down here at this one. So what I'm doing is I'm trying to take the algo nonsense, which is 85% of the trade or more most days. I'm trying to avoid getting whipsawed, because if I say I go long off this event, and I may, if I go long here, for me to be wrong, it's got to push back a full ATR. It's got to get through the volume event where there's trapped traders that want the hell out when it comes back. That's why we trade certain methods off that pattern. Then it's got to push all the way in ATR and plus 15% to get me out of the trade. This position sizing is all part of that, right? So it takes into account me getting in here, getting out here. I can put on, if I want to risk $500 on this trade, I could put on 0.2 of a full contract or 2 micros, right? So everything is here for you. Everything that a trader struggles with, why traders fail, is all built in basically to this zone drawing tool. You know where you get in, you know where you get out, you know your sizing, so you're not over trading your account. Everything is here for why most traders fail. And it's the best edge I've ever seen in 25 years. So if you want to listen to me, which you're on this webinar to do, I think, then you have everything. You have the edge, you have the volume event, you have the entry, you have the exit, you have the position sizing. This eliminates 95% of why traders fail. But it's still on you to not do stupid crap, right? Meaning you get in a trade, I show you everything. I'm like, yeah, this is a long. And again, these webinars are not to mirror my trades, is to learn how to do this for yourself, which you want to do anyway, right? But you're like, yeah, I'm getting long here with Scott. Awesome. All right, I'm long. All right. So I'd say my exit's up here, right? You're like, you get 20 ticks in your favor. You're like, oh my God, I'm out. Right, so it's like I can lead you to water, but I can't make you drink the Kool-Aid, the correct, where I get out. And that's the other thing too. I always get these questions. Well, what's your winning percentage for these strategies? My winning percentages, these are all profitable strategies, right? Because the edge is inherent in the event in itself, right? So even if I didn't have, strategies are just these events in important areas. Even if I didn't have the important areas, right? And I did this for a month in 2021, or I think it was, or 22. I did this for a full month just to show that the edge is the volume event. I didn't care where this stuff occurred. I would follow the pattern, and I didn't have Algo Guide. I wasn't using Algo Guide at the time either. All I would wait for is the stop iceberg event that was threshold worthy, meaning enough volume to trade. I would wait for the ATR, I'd wait for the retest, I'd wait for the confirm, and I'd put the trade on, no matter which way it did it. And that's all I looked at, nothing else. And it was probably, I think it made like 13 grand for the month trading. I was trading like 1 lots, I think, at the time. So the point is, doesn't matter what I made, the point is the edge is inherent in the stop iceberg event. Now when you apply this information to important areas, and again, I have my important areas, you may have your own. Fine. What I'm telling you is, I don't care how powerful your edge is that you think it is or your area is. Great. It's not for me to tell you if an area is important or not. What I'm telling you is if you're not using this information, you don't have all the information. So great. I'm glad you're profitable. But I can promise you, if you understand this stuff and look for this stuff in the areas that you're watching, you're going to be 10 times more profitable. Again, that's just a random number I pulled out. But the point is, if you're not using this stuff, you don't have all the information, right? You just don't know what you don't know. But that's why I'm trying to teach you to demand this stuff, right? All right, so for this actual event, it's about to confirm as a bullish event. If it tags the ATR, you can see algo guy is bullish. This is gold, right? And what do we have here too? So structure-wise, you can see what's happening here. So the ridiculousness that has been going on yesterday led to this move, right? This is all fractal, meaning I could do this on a 5-minute chart or 1-minute chart. But overall, I mean, this was the balance area, but you can just put this stuff in. The point is, you can see it just broke through that balance area, right? So overall, this is a failed balance breakdown of this structure. So I can put it, I should be putting this trade on right now, to tell you the truth. FBB right now, I'm going to trade this double size, failed balance breakdown in gold. And then there's other trades I can put. So the FBBs, I get in aggressively, meaning I'm not waiting for the retest of the zone. All right, of course, we got a Fed guy talking. This is just, guys, it's brutal, man. I don't know what to tell you. It's insanity. If it's not a Fed guy, then it's a headline. If it's not a headline, then it's a headline, and it's someone from a country, leader of a country saying something. If it's not one of that, then it's Trump posting on Truth Social. It's brutal. It's exhausting. All right, so what I did there is, so I have different methods for these trades too, right, depending on the strategy. So I just took a FBB. I just showed you that. I'll go over it again. That's this trade here. Failed balance, in this case, breakdown. An aggressive entry. What's an aggressive entry? It's when I take the trade, the first move out of the event, right? Just because it's such a powerful thing, these failed balance breakouts, I don't wait for the retest. Does it mean it's not going to retest? No, it's probably 80% it's going to come back to the zone. I don't know that for sure. I don't want to be messing around on powerful trades where I'm hoping for a retest and the thing runs off the page and I'm sitting here with nothing on, right? So if it does retest, then there's other strategies I can put on. The bark, the lick, right? Those are just a couple more other strategies I can put on. So you want to have different, that's why Apex or a similar thing, funding company, are great methods. One, if you're learning, you're not risking your own money, especially in this environment. You should be trading those things anyway. And if you blow them out, you're not losing. You're losing a fraction of what it cost, right? So if you, again, I haven't got into this yet, but just go, that's the stuff here, right? This is everything I use in my trading, guys. It doesn't mean you have to use all of the stuff that I use, but I'm telling you, especially in this environment, like use something like Apex. This is the one I put my name behind. I've used it for going on 3 years in May, right? Use Pulcini 50 for any sale they've got going on, and you can get these different accounts. What I would do is what I do, and I would do the same thing. If you're going to trade my strategies, you apply, and you can see each Apex account is, and some of these are live, some of them are, well, they'll all be live eventually because there's an edge. It just takes time to build up the accounts to the pay point, right? Or to the required target, right? So just quickly, I know I go over this every week, but there's new traders in here, right? So So you can go in here and pick which one you want. So you got Rhythmic, or you can do it through Trader of 8-2. So like for the 150 here, I'll try to grab this thing before this ridiculous scroll nonsense. You got to make $9,000 before you lose 5. Great. The problem is with these, the one major problem, it's not a problem. I mean, there's a give and a take, right? If you're using these as practice or whatever, if you do well, then you're funded anyway. And if you blow them out, you just lose a fraction of the cost. But the issue is, like say you do the $150,000 account. This is another issue I have with all of them. They all do the same thing. They say, oh yeah, you get a $150,000 account. Well, when I see a $150,000 account, I think I can lose $150,000. No, you can lose 5, right? So they should say it's a $5,000 account. So the point is, like for this $150,000 account, you got to make $9,000 before you lose 5. Well, the issue is, and this has happened to me about 100 times, and I'm not exaggerating, where you'll go up like 80. I got to turn this up. Sorry, there There's stuff flying off here. So nothing in equities right now, guys. That's why I'm going over this stuff. It's just literally whipsawing back and forth. Just waiting. Literally, it's just waiting for a news headline. These news headline algos are just killing it, right? So they wait for a keyword and then they just fire in orders, right? So that's all. That's what's going on right now. There's no trade. It's just whipsawing, waiting for a headline. Anyway, the issue with with any of these funding companies is they have these trailing stop, right? So I can't. Again, it's over 100, I would say, that this has happened. Well, probably not that many, probably 50 times, I would say. So I say I get up $8,900. So I'm $100 away from getting a funded account, right? And then I pull back $5,000. Well, that leaves me still up $3,900, right? Well, if I'm trading a real account, my real money, I'm still up $4,000 basically. In this, you pull back $5,000, you're out. That's the hard part about these trading funding things, and they do it for a reason. I'm well aware, right? They're churning bad traders, and then you got to pay for another one. But even if you do, if you lose, you pull back or you lose the $5,000, the fake, pretend $5,000, you lose the feed to do it, which is, when they have the 80-90% off, you're risking like $50 or whatever. So especially in this environment, and especially if you're learning something new, like if you're learning my methods, I highly recommend you get something like that. Again, I put my name behind Apex, but there are caveats to it, like anything else. All right, so I already took the FBB in gold, and I took a double size, failed balance breakdown. Again, this is a balance from a while ago, but it's still very important. You can see at the time this had a failed, we caught this too, failed balance breakout at the time, tried to break out of this guy, actually built a little more balance, tried to break out of that, and then failed. And this is what should happen when you get failed balance breakdowns. This is actually the picture of my trading strategies course where we missed this trade, and I was waiting for this. Where's that? Was it this one here? No. Yeah, it was this guy. So this is the epitome of a failed balance breakdown. Right here, balance, two-sided trade, traders placing bets, tries to go lower. How are the shorts feeling here? Awesome. How are the longs feeling? Not so good. Then it comes back, and then it builds more balance. So this thing already should have gotten killed. Why has it come back? And then when it got through this high volume node and broke out of this balance, gone, right? So that's why it's such a failed balance breakouts are the most powerful trades you can take, in my opinion, in position trading. Here come the headlines. So again, this is what happened here. Granted, this was a while ago, but there hasn't been a lot of balance here, so I'm fine with taking this trade, right? I mean, you can make that a balance. It's ugly balance. But it did come back, and it just ripped right through the high volume node. I got my event. I'm in aggressively. This is a very important area. If it failed, it wouldn't surprise me, but I don't know what's going to happen next. That's why I just put on my trades with my probabilities, with my stop outs, right, if I'm wrong. This is where this whole thing failed. Gap down from and led to that. So if it fails, then it fails, right? But based on the structure now, it looks like it's going to rip through it. I am long. I'm long double size. If this comes back, I'm going to put on bark and lick. I'm going to put those on double size too. Right now, all I have on is FBB, where I don't wait for the retest. I get in right away. All right, so other than that, there's not a ton going on. I'm telling you, these algos are just sitting here waiting for a headline from somebody to open their mouth. There was a stop run here in crude. This was the same trade I just lost on. And remember, I missed the reversion here, but we have another stop run into the GEX level. So I'm going to put it on. This is what you do, guys, right? So I lost on the first one. Does that mean, oh my God, it didn't work? I'm not putting this one on. This is the same exact thing. It's a stop run into a GEX level. I'm putting on the trade. I actually want to get on the micros here because I'm trading too big to. Hold on here. So this is the cross trading feature of Bookmap. Hold on, crude. So I could put on 7 normally. I'm going to put on 14 because this 7 position sizing is based on me entering here on the position trades, right? It's not. I'm entering right smack dab in the middle of the zone. The other thing I want to watch is so you can judge here if it's going to go through. It already tried to go through, so. But it is a little bit below here. If this pops back above this GEX 10 level, I'm going to take these 14, sexy Gexy. I already took it once and lost. But this is why it's called probabilities, right? Like you keep putting if you have an edge, you don't know what's going to happen next. Straight out of trading in the zone, you just keep putting the trade on. You guys ready for that? rant. We'll do one little rant here, and then I'll see if there's any questions. Of course, I can't find it. Let's see here. Of course, I can't find it. 1 second here. If you got questions, throw them in YouTube, please, and I'll answer them. All right, so I didn't put that on. Okay, guys, so I'm probably not going to put this on now, right? It's looking for, you want the area, the stop or the iceberg event to hold the GEX level. That just blew through there, so I'm not going to put this on now. We'll wait for another one. But there's also position trading strategies I can do too, and you can see here, this already confirmed. I already missed this trade, actually. I'm glad I didn't put that on. Why? So, of course, this was a winner, and I missed this too because I didn't hear it. I had my volume down. Came into the GEX level. What do I look for? I could put on double size because I'm getting in here versus up here, right? Well, here's your dealer reaction. So I would have been on a half there, and then I hold half like I did the first time. So that one was a winner, and I missed it, of course. But that's the trade, right? Sexy Gexy. So again, I will post this. Keep an eye on my Twitter, X, whatever it's called. I'll post I did the webinar with Fabio from Mentor Q yesterday. That's who has these levels for all these other products, right? All right, hold on, we're hitting tick extremes here. So we're not getting any events. So I do not trade and let the foundation of my trading, the driver of my trading are SI events, right? If I'm not getting an event, I just let it go. That's fine. But we are getting tick extremes with the hero at highs, which is this is just some strange trade as usual, right? You can see it keeps tagging this is NYSE tick, just show you on the universe's stocks, it's over 5,000 stocks in the NYSE. 1,000 of them are down ticking at the same time. That tells you that there's program selling in the market usually. Not just a blip here and there, but if it just stays down here like yesterday, or even today, you can see it can barely get above the zero line, and it keeps tagging the 1,000. That means it's program selling, like the bigger funds are selling when it hangs down here like this. NASDAQ did it earlier, just got in here, but you can see. You can come up with a thesis based on this too, right? It'll flip. Many times it'll flip the other way too. But right now, this thing can barely keep its head on both of the NASDAQ tick and the NYSE tick above the zero line. That tells me bearish, right? And here's another thing I didn't notice. I probably wouldn't have taken those longs earlier if I saw this. This is one of my rules, right? I have very few rules where I won't trade both ways because I'm a day trader. If you see the ADD, the advanced decline line, minus 2,000 in this case, you don't want to be taking longs, right? Why? Because this is, out of the universe of stocks, 2,000 of them or more are down from their previous day close. That means, again, then you couple that with this tick extreme stuff, the big money, the funds are unloading. You don't want to, again, I have a rule, I won't go long. So if I would have seen this is my own fault, right? Not having all this information. This is stuff you want to look at the open, right? I lost on both ISI longs and the ES and NQ at the open. The point is, when you're seeing this, you'll get these blip rallies, but it's like this is what the day will look like, right? You'll get these huge down moves, you'll get a blip, little tiny shallow rally, and then a big down move. A little tiny rally, a big down move. I don't want to bet on little tiny rallies, right? I'd rather be on the other. So on a day like today, you can eliminate one side of your trading, meaning the long side. It doesn't mean you won't get these rips, but they're very short-lived, right? Speaking of that, I want to read Spot Gamma too, because I haven't had a chance to read that. Let me answer some questions here. I didn't get to go into my rant either. I'll get into my trading in the zone rant later. And how do you confirm your entry? I just talked about the Ronnie. So the entry is the same as, it's the yellow line on the zone drawing tool. It's an ATR plus 15%. So if I got in there, my stop. Again, I'm not doing anything off of this particular event. Let's just use the trade I'm in. Right, so I just took an FBB long, fail balance breakout, breakdown in this case long. That's my entry, the yellow line.
It says consumer behavior is going to be tested if prices rise.
All right, so that Fed chirps. I wait for the ATR plus to get in, and my stop's on the other side. That's what this yellow line represents. It's an ATR plus 15%. That's how I get in my position trades. Right, it helped me avoid Algo City. as best as I can. I already covered that. So anyway, what was I saying? Let's see what else is going on here. This is Russell. So you have buy ice here. You can see, guys, like it's all, these are all over all these markets all day, every day. You had buy ice. Came down, bounced off, missed this trade obviously. Bounced right off the ATR, back to the zone. That's the ATR reversion trade. So the ATR reversion trade is the best way to scalp that I've seen to be able to scalp with these algos, right? If you think you're going to scalp trading the order book, good luck. I will put it at 100% odds you don't make it after, you might make it a day or two, maybe hold on for maybe a month. You show me anyone that can scalp just trading the dome over an extended period of time. Again, this is how I made my millions of dollars, right? I like making millions of dollars. If I'm not doing it, then it's very, very, very difficult. That's why I had to adjust my trading style, right? Most of you guys know my story. I was one of the top scalpers on the planet, and then it all disappeared overnight, 2005. Spent another 8 years trying to reinvent my style because it just stopped working. Why? Because the algorithms took over around that time, and then this is the type of trade you get now. So you're not going to be a consistent money maker trading off the dome unless you are the fastest clicker, or you can, if you can automate your stuff, then fine, good luck. The best scalp that I've seen to be able to compete with these computers, these algorithms, the AI, is these reversion trades, because it's very defined. You know where you get in. Here's the 1 ATR, here's a 2 ATR, here's a 3 ATR, here's the 1 ATR stop, here's a 2 ATR stop, the 3 ATR stops down here. You get in at the 1 ATR, whether it's aggressive, meaning first move into it, or you're waiting to bounce off something, that's called the back and black. You get in, you get out at the zone, that's the trade. And you can see this one was to the tick both ways, basically. Here's your entry, here's your exit, back at the zone, you're out. That is the best scalping method that I've seen. You might want to listen to me. Again, if I can make millions of dollars scalping the normal way, the way I used to off of the dome, I would be doing it. There's a reason I don't do it, because it's impossible unless you are literally the fastest clicker of all time. I was one of the fastest clickers on the planet, and I still can't compete, or couldn't compete with a computer, right? All right, so crude, this last event, there was another stop run.
US tariffs on China now total 145% after the latest hike. CNBC citing a White House official.
See, that, guys, this is why it's dropping right now, right? They just said now the tariffs are moved to 145%. It's on CNBC. You can't predict it. I don't have a trade on, but it's just brutal. If you do have a trade on and you were long, you're like, what the hell, right? So great example is, say you're just looking at the hero. And I want to read spot gamma, by the way, because this is one of my routines. Right? If you're looking at the hero, you're like, man, this thing's so bullish. Yeah, I'm going to go long. Well, great. Say you caught this when this started moving notional, right? It moved over $1 billion. That's what Brentford spot gamma says is a notion, heavy size move where the options dealers are really going to affect the market. Well, yeah, great. Well, you're in it, and it did move. And then it did that. You're like, well, what the hell? Well, because you have a news headline. You can't predict it, right? So it's like you gotta eat it right now. There's always news headlines per se, but nothing in this magnitude. It's silliness, right? It's random nonsense. All right, well, I thought this was an event. We got, hey, you guys see this pattern here? I don't know if I mentioned this pattern where the market tags an ATR and comes back to the zone. So this is what I was looking for. Look at that, to the exact tick. Guys, it's every market does the same thing. It's crazy. So if you took that reversion, winner. But this is the pattern I wanted, right? ATR retest confirm. I'm putting on Bark and Lick now too. Gold, double size. Guys, there's tons of traders in my trade room taking this trade too. Bark. Lick. Right. Actually, I should have waited there. So what I do is if I get away with it, say, because you can see that's where I should have been filled. If it's already moving away, then I just wait for it to come back. So I wouldn't even put that on, but it's on, it's fine. Stops down here. So there's a perfect example. You're watching this, Ronnie Rojas. My entry is at this yellow line, which is an ATR plus 15%. My stops down there at the other on the other side of the ATR, right? So on this labeling, it's called the long aggressive line. Actually, it's that, and the short aggressive. So I got long on the long aggressive entry point price, and my stop is the short aggressive in this case. So those trades are on. Stops are down here.
332 per US dollar.
You can move it a little bit below Gex levels too if you want. Like I'm not going to stop out right on that Gex level. I'll move it 5 ticks down. Say 90, 31.92 ish. So that's my stop for these trades. 31.92. Wait, is that right? I'm sorry, 31.49.2. I usually refer to it the last two digits.
Well, again, extending gains up 0.6%.
All right, those are on. Bark, Lick, FBB, Mr. Gold. All right, there's been nothing in these equities since the open, right? Again, I shouldn't even have taken those longs that I did because the ADD was minus 2,000. That's my filter not to take longs. Anyway, you see all that? There's about 100% that this market's going to come down and fill this. Does it mean it's going to happen right now? No, probably going to. Why is that relevant? Because if I got a bark and lick trade, this would be my target. Or if you're just looking for a thesis, you're like, okay, let me take it. You should be doing this every morning. You pull up your market and you look at where all the liquidity is. You say, okay, wow, there's not a lot above, but there's a ton below. Remember, the longer it's been in here, the more these guys want to get filled. They don't care. If it just sits in here, they're okay with the news story blowing right through them. So what does that tell you? They want the fill, right? So the big money gets their fills most of the time. Why do I know this? Because this is the game I used to play. I used to load up the order book. This is back when the order book had thousands in it, right? I would load it up with like 2,000 contracts. I'm just giving an example here. And then I would start to sell up here, right? I know I have my resting bids in. I start playing games. Start tagging the order book, some sells to see if the market will respond. Like right here, I'd be like, okay, there's no one buying. I'm going to sell some more. I'm going to sell some more. I'm going to sell some more. Then I cause this cascade effect right into my resting bids, and I'm out of the trade. You know, I make 3 points on 2,000 contracts. I'm in and I'm out. Well, they do the same stuff with this. This is why I know the games, right? It's like this will tag this or come real close to this. So another thing you guys want to watch out for too. So say you did get, I don't have anything on here, but say I put on a lick trade where I'm playing for this liquidity. Well, when it gets down on this liquidity, these algos pick up this big size and they try to make them chase. These guys aren't chasing anything because they've just been sitting here. But that's my point is if you're looking for a tag of this, if it gets close and you start to see it run away, I would get out of some of it. Because it doesn't always just fill it the first time down here because these algos were running away. We'll probably watch that happen here. So that's a little lesson on liquidity. Am I verified on a third-party site like Kinfo? I've never heard of Kinfo broker statements. I have broker statements for the. I got all my. Which I post in my room. I haven't posted lately. I've been getting smoke lately too, but I post the Apex stuff. Let me show you. So let's keep track of your accounts, and I have the broker statements from my. For the automated trades, so I have stuff that's automated. The ATR reversion trades are trading at a trading firm that backs me. I got broker statements for that. But again, guys, the only trade that you can really judge the system or my strategies is the ATR trade because everything's defined where you get in, where you get out, right? And again, I'll have full stats for that trade. The position trading strategies I already went over that, right? So I can literally show you, which I did, the exact entry. I give you the setup, right? This was the FBB and the bark and lick. Gold. I tell you where I'm getting in. I tell you the strategy. I tell you where I'm getting in, where I'm getting out. Okay, now what? So how are we going to judge this, right? Say my target's up here at this blind spot 2 up here, right? Which just say my target's right here. Say I'm going for a really small trade. Say my target's right here, and I get out. I'm out of my full trade right now. I'm not. I'm just giving you an example. Say your target's up here, right? So say the market does this, fills me, I'm out. You're waiting for here, and the market turns around and does that, and you get stopped out. So how could you possibly judge the winning percentage if you are not getting out exactly where I'm getting out? Do you see my point for the position trading strategies? That's what I'm trying to get through to traders that send me all this nonsense. Guys, you can figure all you want. If you don't believe what I'm telling you, then you get Bookmap, You get the data feeds, and you have 5 years of data feeds as part of my room too. You get the data feeds, you run the days, you get the zone drawing tool, and what's great when you do the practice, the replay, it draws the events. You can trade on the replay mode, take these events, find your areas, and trade them for yourself. Go back a month or 2 months or 6 months for each product, for each strategy you want to test, and test them out yourself. You shouldn't be taking my word for it anyway. If you don't believe me, go and run it yourself. But my point in this instance is, if I'm out there and you're waiting for your profit target there, I'm out with a profit. You get stopped out because you didn't get your full R. How do you possibly judge that? Profit climb. I'd love to know. Please tell me. How would you possibly judge my trading strategy that I'm showing you here if I'm out here, you're looking for a bigger move, and you get stopped out? So you take a loser, I take a winner. How could you judge that strategy? You can't. That's the point. The reversion trades are a different story. You guys screw this up too, but this is very defined, your entry and your exit, right? You're getting in at the 1 ATR, the 2 ATR, the 3 ATR, depending on which one you're looking at. And you're out of the zone. That's defined. Yes, you can come, and I will have those stats with the trading firm, right? And the statements I have too, that's the trading firm. I don't even know if I could maybe black some stuff out, but I'd have to check with them whether I could post that stuff. But again, you don't even have to take my word for it. Run it yourself. You should want to do that anyway. So I'm waiting for your answer there, Profit Climb. How can I judge these strategies if I'm out in one area once I get in? I can give you, everything's defined until it's the exit. That's where it gets tricky. So you tell me how your little the third party site like Kinfo, how you can judge that. I'd love to know. All right. For some reason too, I'm hoping my Bookmap doesn't crash. I keep getting this. My computer is loaded up somehow, and I keep deleting files, and I keep getting it. So hopefully I don't crash here. But other than that, I do have this gold trade on, and it's working fine. So here's a perfect example. Where am I getting it out of some of this trade? Remember, I took double size here too. So this is already a 60 tick winner in my favor. So let's take some of the areas that I get out. Doesn't mean that the Profit Climb has the same areas. Right? He may be looking for bigger moves. I'll show you where I get out, and you can use those areas. Here's my issue here is that Madam Ludwig came in my thing yesterday and tried to put me on this new version, and I don't have Ludwig levels. That's one of the main areas I get out, and I don't know. If anyone in my trade room can post a lug chart for gold, that would be awesome. Other than that, there's not a lot up here because why? Because we're moving up new highs. This still is in this Izzy zone here. You can see it's right at the top of this, right? So I guess I can get out. I mean, I do have double size on, but see, this is where I use the tick strike too. See the gold going crazy. So I don't have to get out of any here because why do I want to sell if there's no sellers, no other sellers? Let's get this sound going here. So you can use this at an area. So say this, I had the lugs working, which would be great. One of these years. Right? And we're at a lug. Well, I could be like, oh, let's see. I'm going to see if we can get through the lug. They're buying this like crazy. Right? Profit Climb. I wasn't judging you on your strategy, just asking if you had proof. The proof is coming in my trade room and watch me trade in, or get the replays and run it for yourself. I have proof. I have all of my Apex here. Here's the most recent one. But again, here's the other thing too, guys. My trade room it'll be my 4-year anniversary in April, right? The other thing too, you want other proof? Go to my website, go to the testimonials. There's tons of profitable traders in my room, right, that are using these trading strategies. Go over here, go to testimonials, click on a shining face here, right? And you can see his testimonial. Right. Other than that, there's not much I can do. If you don't, if you think you got a better system, great. You can run the stuff for yourself as well, right? I've been doing Bookmap webinars for 7 years, live trading, right? So you got to remember too, guys, this is live. This isn't like me coming in after the fact. Wow, look at this event here that turned out I was long here, and look at this move. Like, I'm trading live, right? So not many traders trade live, as far as with showing you the exact entries, the exact exits. That's the other thing I chuckle about these trade rooms. Like, guys will be like watching the market. They'll just have the regular bar charts up, which again, they don't have all the information, which is fine. They can do whatever they want. And then they're like, they get in, they're like, okay, I'm going long here. They have no justification. They're not really explaining why they're going long. They just, I guess, expect traders to blindly click on the mouse and then the thing like goes in their favor, and they don't really say anything, and then like a minute later, like, okay, I'm out of that trade. It's like, well, how is that useful for traders? Like, I don't understand. Again, you have the edge, the SI event. If you have the zone drawing tool, everything's on the heat map. You know where you get in, you know where you get out, you know your position sizing. Where you get out of the trade, that's where it gets a little subjective. But I go over that in the trading course of all these areas, and these are the same areas that I get out of my trades. Where's that? Right here. Trade exit areas, right there. So the exit areas are basically, this is what I have in the trading in the zone document too, right? I pay myself as the market makes money available to me. Market profile, composite highs, lows, points and controls, VWAP, extreme standard deviations, spot gamma levels, method Q levels, struggle to get through heavy resting liquidity. We just talked about that. Important predefined zone. Those are my IZZY zones. Same day prior events, major Ludwig levels, new opposing. So all these areas I will be watching the market and trying to judge. Like right now, we're in this last IZZY zone for gold. See how it's starting to struggle here? So now I'm going to get out of one of these. I gave it a chance to blow through because I do have double size on too. So I'm going to get out of one of each. I have 4 on of each. I'm going to get out of one. Hold on here. Remember, I had bark, lick. Well, I'm not getting out of the lick until we get to the liquidity. That's what the liquidity trade is. So here's the next liquidity up. So I'm holding the lick trade till it gets there. So the lick trade, that's why it's a great R trade, because I don't get out of my traditional areas. So right now I just showed you where it is. Zone is kind of struggling here. The lick trade, I'm holding to that liquidity at least. If it can blow through there, then I'll hold for maybe this one, right? But you can see the liquidity trade is a bark trade. The bark trade, I just got out of one because it's struggling in this IZZY zone, and I got out of one of my FBBs. The liquidity trade, I'm waiting to see if it can make it up to these. And if it can't, then I either stop out or I wait. And that's the other thing, how I trail my stops. That's the other biggest error that traders make. We've already talked about the main errors. They don't know where to get in. They don't know where to get out. They don't know the correct position sizing. The other thing is by far, and I've heard educators talk about it too, about trailing your stop to break even. Guys, what do you think you don't think these algos know? First of all, they can see what we can see. They can see there's nothing going on right now, bigger money, right? That's when they start the game. So all the traders that got long with me, and again, this is not to mirror my trades. You should have been seeing this for yourself if you're understanding what I'm doing, right? How many traders were like, oh, I got an awesome trade here. I'm going to trail my stop, so if it pulls back, at least I make a little bit. What do you think these algos, this is what they're built for. They know that. So when nothing's going on, that's where they start their games. So you trail your stop, so you make a little money, you get stopped out, and then it does that. How many traders have that happen to them every day? So I don't do that. Right now, for me to get stopped out of this trade, it's still got to come back all the way back here. I mean, I'll get out of important areas like I just showed you, but for me to stop out of my full trade, I'm here. Or an opposing volume event. If I get a new event, then we'll have the line, just like this one. I'll trail my stop that way. That's the way I trail my stops by. Is when you're trailing your stop based on your money or what you don't want to get back, that's imposing your will on the market. The market doesn't care what you want to give back or that you have a profit or you don't have a profit or whatever. The market cares about stuff that's going on in the market, real-time volume events. That's where I trail my stop to. David Buchanan, what is an SI event? Obviously, you got on here late. SI events are stop iceberg events. Stop iceberg events are based on Google CME MBO data. Just like this. All right? So the CME came out about 8 years ago. It's called market by order data. It's enhanced data that shows you can see all of the up until now, and most of these data processors still only have the market by price. So first of all, when you're using market by price, so if you're on CQG or any of these other ones that don't use the enhanced data, the price levels on the dome that you're seeing are all fake outside the first 10 levels. Meaning, if I'm on CQG right now, or whatever program, we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, basically that. So you see that and that. Those are the only real orders you see. All this stuff that you see on your platform, it's all fake. It's not real. It's not showing you what's really there, right? It's a snapshot in the past possibly, but it's not real. With the MBO data, this is just one of the things they show you. They show this is all real orders in here that you can see. The MBP, it's not enhanced data. It's not real. Those aren't real orders. So if you're relying on that stuff, it's not real. It's a snapshot, but it's not real time is what I'm saying. So here's the benefits right there. Full depth of book of the MBO data, right? So the only data providers that I know of right now that have the MBO data are Rhythmic and Bookmap, the Bookmap data, right? So this is the key right here. This is why it's the driver of my trading. It lets you know the exact, because based on the order IDs, if you have the correct software, right, you can judge where the iceberg orders are. What are iceberg orders? Iceberg orders are hidden orders in the order book that don't display, that only populate when they get traded into. That's what the big money uses, because the big money, if they put in, look at this order book with 5s and 6. If the big money comes in here and they put a 200 iceberg in here, what do you think the algos are going to do? They know this person wants to buy 200, right? Because they're flashing their orders, and you can't spoof anymore, so it's supposed to be real, even though they do spoof. So if someone puts in 200, these algos are like, oh really? And then they start to run the market away from this order because they want this order to chase. And then this is the game, right? I know this because I used to play this game when spoofing was legal, right? So if someone comes in here right now and someone came in right now and put 200 lots in the order book, these algos would run the market away because they know someone needs to buy, and then they put all their offers in, right? So as this order says, oh my God, I got to get this off. My boss says I got to buy 200 for our clients. They run it. They got to pay up, right? That's why the algos run it away from them. The algos put their orders up here. So this order chases. They finally get filled up here by the algos that just front run them. The algos get filled at a better price up here, and then it comes right back. Right, so that's why big money uses icebergs, because if they flash big sides, the algos will screw them every time. So icebergs they only have to show a percentage. I think it's around 10%. So if this order, this was about 200 icebergs earlier, all they got to show is 10%. So it looks like a 20 lot in the order book. The market comes down, trades into 20 lot. Someone thinks they're going to blow right through a 20 lot, and then there's another 180 behind it, and they eat a mouthful of ice, I like to say, and then the market responds. So knowing this information is the most important information you can possibly have trading, in my opinion. And again, if you want to take my word from it, I have traded millions and millions and millions of contracts. I used to average 50,000 round turns in the mini S&P a day. That equates to over 1 million contracts a month, just back then. Right, so you can imagine how much, and again, guys, this isn't glory days and me bragging. My point is you can imagine how much market information I have seen as far as order flow, right? So you may want to listen to me. That's my point. So that's what an iceberg is. Their SI is called a stop iceberg event. So Bookmap, the brilliant developers that they have figured out a way to disseminate that data, the MBO data, and put it on the chart. So you see it on the subchart, and the subchart, my brilliant developer in my room, Johan, he's a trader in my trade room, figured out a way to draw this information on the chart. And that's what those zones are. So this zone, this buy ice, is this event, the exact area it started and stopped. And then we have the rules around the events. And here's the gold trade. How'd that work out? I'm going to get out of my lick right here. Hold on. Perfect example, guys. So nothing going on, but that's why you want to watch other markets. All right, so I'm going to see how it's running away. This is a perfect example right here. See how it's running away from it? So I'm going to grab another one of my FBBs and one of my barks, because this is one of my areas where I will get out of my trade as the market makes money available to me. There you go. So I still have some on. If this keeps ripping, there's another liquidity level up here. But so many times the market will come, see this? So these algos pick up this size in the order book and they try to run it away. They think it's a big order dropping in the order book. This order's been in here. This thing's not going to do it. It's not going to chase anything. But they don't know that. They just see they pick up that big order and see how it's running away. This is why you don't have to wait for the exact fill of these prices. If you see it starting to struggle, get out of some. So anyway, great trade. At least we got to put a trade on that worked here. Nothing else is going on. We put on the FBB, bark and lick. And this already has been, where was the entry here? 94. This is a 150 tick trade, guys. This is a $15 trade in gold. And it was all predicated, and remember I traded double size here because of the because of the situation, right? Remember it said failed balance breakdown, got through that high volume node, we got the trade, so I had already gone long on my strategy, and I did double size based on the thesis. All right, any questions? I feel like I've been in this webinar for 4 hours. These markets have been very trying lately. So I got out of some, so what do I do now? Well, usually I'll get out of my full position. Did anyone post the lugs for me, by the way? I may have been out of this full thing. Hold on, my lugs aren't working. Anybody with GC lugs? Oh, we're at red? All right, we blew through red, right? So red was down here. So there should be new lugs. Could you guys, lugs, guys, are Ludwig levels. That's these here. She's part of the trade room too, so she always lets us know when they're rolling and stuff like that. Right here. Go to our website, do a 3-day trial, say you saw the Bookmap webinar, she has special pricing. Second most powerful thing I've ever seen in trading next to the Stop Iceberg events, the SI events. Could someone post a new gold chart for me? Anyone? Bueller. Dan H, that was the incorrect trade there. So you can see my trade room here, posting trades like you're supposed to. I appreciate that, but this is not the right trade. So he caught this 1 ATR reversion trade. I'm assuming he's talking about that. That's disqualified. It already did the reversion there. Right? It tagged the ATR back to the zone. You don't take that one. You look for one retest. It worked, but again, that's not the strategy. So you get an F, Dan. I'm sure you're fine with the F with the winning trade, but that was more randomness in my opinion, but good trade. All right, Mark posted the new lugs for me. Appreciate that. Let's see here. All right, so the new lugs up here at 31.90. You can see it's just starting to build here. So that's the other area where I would get out of my full trade because they're so powerful. We already saw the bounce off the blue lug off of crude today, right? So that's right up here at 31.90. If it gets up here and starts to struggle, I'm out of this full trade, this full long, all three. I only have 2 strategies left I got out of the lick. But that's what we saw here, right? This crude, right off of the blue lug. This is why I use them, guys. They're incredible. Do I know all the properties of them? No, I don't care. Again, most of the things I use in my trading, I want to know why I'm risking my money on it or placing trades off of it. I learned a long time ago when I get introduced to these things, I don't need to know what they're proprietary, right? Whatever she's using for a formula, I use the same analogy every time, right? When you walk in a room and you need light, do you have to take the light bulb out of the socket and just dissect the light bulb to see why you're getting light? Or do you just say, I got light, that's all I need? Same with these. I don't need to know how they work. I know they work, and they're incredibly powerful. Anyway, that's an example of the of crude bouncing off the lug. Again, my gold chart's messed up here, but the new red lug is right there. So if that comes up there and starts to struggle, I'm getting out of the rest of my trade. So there's only 2 areas or 2 reasons I get out of my full trade. One, most important, is if I get an opposing volume event that turns bearish, right? Meaning you get the vent and it gets the ATR line out of there. I'll get out then, and or the major Ludwig levels. So I'm going to put an alert here if this pops up here so I know, just in front of it, so I don't miss my exit. All right. I already got out of some at the lick. I got out of my full lick trade there. That was a great trade. It was 150 ticks. I still have part of my bark and part of my FBB on, and I'm going to see if we can get up to the red lug and judge there. Other than that, if I don't get an event, then it comes all the way back and stops me out. That's how I trade. I'm very consistent in that fashion. In that manner, I should say. All right, any other questions in here? Thank you, Mark, for posting that, by the way. Mark's actually a great example. I've been using this lately. Like when he first got in here, he got verbal lashings nonstop, right? So if you come in my room and you do stupid crap, you're going to get a verbal lashing, right? It's meant to be partially comical, partially to make you kind of embarrassed, to remember the moment, right? He got the most verbal lashings anyway. He's been around probably 3 months, I'd say. Correct me if I'm wrong, Mark. And now he's posting, everything he posts is basically correct. Like the strategies with, hey, I'm doing this. This is where we're at here. This is what I'm doing. Now it's all right, right? At the beginning, he was way off, and he was over trading his account too. But it's just a perfect example, guys. Once you understand this stuff, you make it your own, understand the rules behind it, and then you take off, right? That's the whole point. And once you understand what the edge is and how to trade it, then you go to the next step, right? So this guy's a little He's a little too ahead of himself right now. Let's see if I can show this stuff right. So you see here, but this is good because he's thinking properly. This is a guy in my trade room, J.J. Willis. He's been noticing a pattern with these where he calls it, and I love how I use Canerco because I am a White Sox fan, the worst team in baseball history last year. So he's seeing a pattern. That's great. I don't suggest right when you get in there, you start to put your own spin on things. You know, again, I've watched 4 million of these. Once you get 4 million under your belt, then fine, you can do whatever you want. It doesn't have to be 4 million, but I like that he's starting to see new things. That's my point, guys. I don't claim to be know-it-all. Like everything I do is the answer, right? But I'm basing it off of my experience. One, as a 25-year trader of all the volume I've watched. Two, of trading so many of these things, right? But if you get in there, there's plenty of trades. Like Madam Shizzle got to a point where she's so advanced. She's like, she went to Mentor Q's room now because she was in my room for 2 years. She's got everything down, and she literally said, your stuff, your webinars are too basic for me now. And that's fine. That's what I want, guys. I want you to be successful traders. Like, I want you to get to a point where you don't necessarily need me. I don't agree with what, because I'm, as far as her leaving, because I'm always, and that's the other thing about the trading strategies, of course, too, is it's continuing learning, right? So I'm always making new, if I see something that works, I'm adding to these trading strategies, right? So here we go. Now we finally got something ES. All right, see if we can get a trade on here. Let's see where we're at. But I'm always entering new stuff in there. Why can't I find my ES chart? All right, trying to give back that ridiculous rally yesterday. All right, we got stops and ES. I don't see any GEX levels here, so no sexy GEXy, meaning the auto entry trade where I jump in right in the middle of the zone. It's one of the only, actually what we do have is a TikTok, I think. Hold on. I did say I wasn't going to take longs. Yeah, I'm not taking TikTok. See how it's like just hanging down here? Plus, I don't want to, this is why, guys, you don't want to take longs when you see this ADD. I'm not going to take any longs right now. No TikTok longs. So what's a TikTok? That's an auto entry trade too, where when the tick makes an extreme, you get an event, an opposing volume event, in this case sell stops or buy ice, you jump in right in the middle of the zone and then you play for the quick move out of there. I'm not going to do that right now because of the ADD. Doesn't mean it's not going to pop out of here. All right, so the next step is position trading strategies. What do I have? Are we in an important area? This is still quite, again, these are zones. This is still in an Izzy zone. So if this held, here's a stop run right there. I would take an Izzy trade, inflection zone trade. Let's see what else we got. So I'm looking at my important, so we got the volume event. Now I'm looking at my important areas. If you've got something here that you look at, of course, I don't have the lugs working on this either. Could someone post their lugs, please? This is a market profile composite, high and a low right there. I would take a pick trade. That bounces out of here. So we got Izzy and pick longs. If you see, I'm not just jumping in the middle of the zone. What has to happen for me to go long for those strategies? It's got to move the ATR plus out of here. That's what I demand. In that case, I could put on 2. This is all based on that entry, this exit. So again, guys, this is the point. If you're struggling to follow along here, because I'm jumping from strategy to strategy, market to market, I'm trading live. If you want to learn this, get the courses, get that stuff down. Then when you come in and you watch me trade live, you'll know exactly what I'm doing. All right, I'm going to enter 26.25 here, Izzy and pick long. I didn't take the TikTok. I could have, but I didn't, just because of the ADD. This is ADD is not usually trend down or trend up. It happens, maybe 10% of the time. Izzy and pick ES longs. If this area holds, I don't know. And if this turns into a bearish event, what do I need to see to make it a bearish event? Tags the ATR. Then I could put on barks and licks, kind of like I did in gold, the other way. The other thing I can do here is reversion trades to this. By the way, that was the bark and lick that we took. So the reversion trades, remember I said I wouldn't take it long? I would probably take reversion trades to this event, right? So if it bounces off something important, the back in black, here's the 1 ATR, there's the 2. So say it came down here, tag blind spot 6, Mentor Q level, I would take the back in black, the 2 and the 1 back to the zone. Same way this way. Say it comes up here to the GEX 6, bounces, I'll take the 1 ATR back to the zone. So I've got different strategies I'm watching here. Position trading, I'm going to take Izzy, pick long, first move out. If this comes here and starts to bounce off, I'm going to take the reversion short back to the zone and out of the zone. So this one is very quantifiable and it's very rules oriented. So this is why I tell my room too, if you have trouble sitting in position trades, right, like this gold trade, this one was pretty easy for gold. As far as limited amount of torture, it did do this to me, right? But usually it does it about 85 times. My point is, if you have trouble sitting through this in position trades, the reversion trade is great to condition you to sit in trades, meaning because everything's defined, there's no subjectiveness. This is where you get in, that's where you get out for the 1 ATR. If you're waiting for the 2, this is where you get in. So you sit here and you put your order in and you let them do their nonsense until you get filled. It just teaches you to sit through trades. All right, in the meantime, I'm going to put on Pick and Izzy long, and then we might put it back in black on, and then we'll probably be at the end of the webinar. So hopefully this thing will pop out of here right quick. 25.75 Izzy and Pick long. Let's pick. All right, those are working. In the meantime, I'm not doing anything until this moves out of here. I've got position trades I'll take first move out. Doesn't need the retest. And I got position trades this way if it does that. And then I have reversion trades where I play, where I get in at the 1 or the 2 or the 3, depending on what it does, back to the zone. Back to the zone. You guys, you can see this is program selling. This is why you don't want to mess when the ADD is negative 2,000 with longs. You can see it's just hovering at the tick level. The tick usually tags like this. This is the usual routine for the tick. It tags extreme and then pops back to the 0 line. This thing has been sitting on the 0 line for 25 minutes. So tick traders today that love to play this instant pop are getting their heads kicked in, right? That just because there's bigger money playing today, right? So the tick's not working so well, that tick trade. All right, any other questions, guys? Coming to the end of the webinar here. James, Doug, just curious to know, did you or the room catch longs yesterday when the news came out? No, actually, well, I was actually on the Mentor Q. I'm going to post that here in a little bit. Go to my YouTube channel to see it. It'll be on YouTube, my YouTube channel, and I'll put it on X. I caught the short. It was ridiculous. So I was so happy about the short. It was right at the end of the webinar, and I got short, like NASDAQ, I think it was. And it was like 200 points in my favor. I'm like, see, guys, this is how. And then so Trump said, we're going to increase China's tariffs. Within 10 seconds, in the same breath, he said, there's going to be a reprieve for 3 months or 90 days, and the thing ripped 10%. So I had huge winner turn into a huge loser. I go, all right, guys, it was the end of the webinar, and I was done for the day. I'm like, I'm so sick of this randomness. I'm done. Okay, you can't control that, guys. You just got to hope it doesn't happen when you have a trade on. It sucks. But yeah, there were trades to be had. Some guys took the FBBs, right? So this was a breaking bad. So what's a breaking bad? It's one of the strategies where you look for current balance breakout through the high volume into a prior balance. That was that. So you get an event, you jump in there right away. I think Mark R., who I was just talking about, I think he caught that trade. I don't know if he caught this whole move, but it was insanity. There's no way you predict that. You just put on your trades, guys, with your stops. If you hit your loss limit for the day, there's always another day. There's always another week. This is the most treacherous, crazy, random, absurd market I've ever seen in my life. So if you are making, that's what I keep telling my trade room, by the way. I go, even if you guys are breaking even right now, you should be happy. If you're making money, holy crap, wait till the market's actually settled down again. All right, any other questions? I can see they're still hammering. I'm glad I didn't take, this is why I didn't take the TikTok, right? Trend down, the tick's sitting at 0, no TikTok for me. As far as reversion trades, just quickly, what would I take off of this? I don't have the Ludwig levels. Did someone post those for me quickly so I can, thank you, Mark. So here, this is what I missed the one in crude earlier. I will take it off this one. So say right now, this comes down here. So this lug is at 52.80. Say it tags that, starts coming back. I'm going to take the backdoor reversion trades. So that's these here. So right now, at least I know where the lug is. So my lugs aren't working. We're almost there right now. So all I can really take is actually I can't take any of them, because the 1 ATR reversion's through it. Well, this wouldn't really be, see how it's at 77.50? You know, because a lot of times it'll go through the lug and start coming back. That's actually Mrs. Ludwig's favorite trade, when it doesn't build new lugs and it starts to come back. So I would consider this back in black, say it blows through here, It starts coming back. As long as there's no new lugs formed, I'll take the 1 ATR reversion back to the zone there. But you can see they're just laying into these markets, guys. So another thing you want to watch out for, we got a long way to go here. Nasdaq's a little more visible. So remember we said everything's fractal, right? You got balances. You got a balance there. You got a balance there. Well, the whole thing's a balance too. So this is just traders placing bets. You can do it on a 1 minute. The longer the time frame, the more powerful it is. If this thing turns around and gets back through, I'd say 17,600, this would be the ultimate fail balance breakdown, and this thing should just literally fall off the page to the downside. So that's my line in the sand where I would take FBBs off of this balance, and I will take that probably triple size. So watch that 17.6 area for it to either hold and bounce, or if it gets through there, watch out below. And the same thing, it's not as defined here, but it's still a balance area. This is two-sided trade. My line in the sand for ES, for FBBs, remember we just took an FBB in gold. I would say 51, we'll make it 51.10. Anything below 51.10, I'll take FBBs that way, and I'll take triple size. In the meantime, this has got a long way to go. That's another 200 points. All right, that's all I got, guys. I do this every day for the trade room. This is how I trade. I just basically show you what I'm doing. Hop on by. Glad to have you. But don't come to my trade room unless you're going to participate and ask questions. That's how you learn. All right. Thanks for attending. I will see you guys next Thursday.